10 Day Trading Tips for Beginners. Day trading is the act of buying and selling a financial instrument on the same day, or multiple times during the day. Taking advantage of small price movements can be a profitable game if done correctly. However, it can be dangerous for beginners and anyone who does not follow a well-thought-out strategy. Today we'll look at 10 Day Trading Tips for Beginners. Hello top listers, please give us a like, hit that bell icon to never miss an upload, and don't forget to subscribe. 1. Dedicate time. Day trading necessitates your attention and time. In fact, you'll have to give up the majority of your day. If you only have a limited amount of time, don't even think about it. Day trading necessitates a trader's ability to monitor markets and identify opportunities that may arise at any time during trading hours. Being alert and moving quickly are essential. 2. Knowledge is power. In addition to understanding day trading procedures, day traders must stay current on stock market news and events that affect stocks. This can include interest rate plans from the Federal Reserve System, announcements of leading indicators, and other economic, business, and financial news. So, do your research. Make a wish list of stocks that you want to trade. Keep up to date on the selected companies, their stocks, and the general markets. Scan business news and bookmark trustworthy online news sources. 3. Set aside money. Determine the amount of capital you're willing to risk on each trade and commit to it. Many successful day traders put less than 1% to 2% of their account balance at risk per trade. With a $40,000 trading account and a willingness to risk 0.5% of your capital on each trade, your maximum loss per trade is $200. Set aside a sum of money that you can trade with and are willing to lose. 4. Stay away from penny stocks. You're probably looking for bargains and low prices, but avoid penny stocks. These stocks are frequently illiquid, and the chances of striking it rich with them are often slim. Many stocks that trade for less than $5 per share are delisted from major stock exchanges and can only be traded over the counter. Avoid these unless you see a genuine opportunity and have done your homework. 5. Begin small. As a beginner, limit yourself to 1 to 2 stocks per session. With only a few stocks, tracking and identifying opportunities is simplified. Trading fractional shares has recently become more common. This allows you to invest in smaller increments of money. This means that if Amazon shares are currently trading at $3,400, many brokers will now allow you to purchase a fractional share for as little as $25, or less than 1% of a full Amazon share. 6. Profits must be realistic. A strategy does not have to be successful all of the time to be profitable. Many profitable traders may only profit on 50% to 60% of their trades. They do, however, make more money on their winners than they do on their losers. Make certain that the financial risk on each trade is limited to a certain percentage of your account and that the entry and exit methods are clearly defined. 7. Maintain your cool. The stock market can put your nerves to the test at times. As a day trader, you must learn to control your greed, hope, and fear. Decisions should be guided by logic rather than emotion. 8. Limit orders, reduce losses. Determine which orders you will use to enter and exit trades. Will you use limit orders or market orders? With no price guarantee, a market order is executed at the best available price at the time. It's useful when you just want to get in or out of the market and don't care about getting a specific price. A limit order guarantees only the price, not the execution. Limit orders allow you to trade with greater precision and confidence by allowing you to specify the price at which your order should be executed. Limit orders can help you cut your losses on reversals. If the market does not reach your price, your order will not be filled, and you will keep your position. 9. Trades should be timed. Many orders placed by investors and traders start executing as soon as the markets open in the morning, adding to price volatility. A skilled player may be able to identify patterns at the start and time orders to profit. However, for beginners, it may be preferable to read the market without making any moves for the first 15 to 20 minutes. The middle of the day is usually less volatile. Then the pace picks up again as we approach the closing bell. Though rush hours provide opportunities, beginners should avoid them at first. 10. Stick to the plan. Successful traders must move quickly, but they do not have to think quickly. Why? Because they've planned ahead of time a trading strategy and the discipline to stick to it. It is critical to stick to your formula rather than chasing profits. Don't let your emotions get the best of you and cause you to abandon your strategy. Remember a day trader's mantra: plan your trade and trade your plan. In conclusion, the art of day trading is difficult to master. It takes time, talent, and discipline. Many people who try it lose money, but the tips provided above may assist you in developing a potentially profitable strategy. Day traders, both institutional and individual, contribute significantly to market efficiency and liquidity. You may be able to improve your chances of trading profitably with enough experience, skill development, and consistent performance evaluation. Thanks for spending some of your valuable time with us today, top listers. If you liked this one, please give us a like, hit that bell icon to never miss an upload, and don't forget to subscribe. See you later.